Hi and welcome to demonstration video number 1 for Chapter 4. For Chapter 4, we are looking at FICA taxes and voluntary deductions. And first of all, in this video, I'm going to show you how to calculate Social Security tax, which is also known as OASDI. OASDI is the acronym for Old Age Survivors and Disability Insurance. The tax rate for years 1990 to 2014 has always been to 6.2%. So keep that in mind when we are calculating the tax for this demo video. And I've got then 4 different scenarios here that I will demonstrate. And keep in mind we will go ahead and follow. There's 4 different steps to calculating Social Security taxes. First of all, you're going to determine the current period taxable earnings for the OASDI or Social Security tax. Then you're going to add the step 1 result to the year-to-date taxable earnings for Social Security. And after that, if the step number 2 result exceeds the taxable wage base, then we're going to determine the amount by which it is higher and subtract this amount from the step number 1 result. And our new amount, which is, if it's positive, then it's used to determine the OASDI tax. If it's negative, then we will know that the employee has exceeded the cap of $117,000 and the tax will be 0. So let's go ahead and I'm going to go ahead and dictate up here. Is $117,000. So any employee who makes over $117,000 at any given point during the year, they are no longer obligated to pay that tax. So from 1990 to 2014, the OASDI tax rate is 6.2%. Okay, so let's keep that in mind. While we are doing calculating our taxes. Okay, so for each employee listed below, calculate the taxable earnings for Social Security for the described pay period. And note that none of these employees exceed the Social Security tax wages base subsequent to the pay period it's discussed here. All right. So far so good. We're going to go ahead and take number 1 into consideration. Current period taxable earnings for Social Security or OASDI is $1,625. Okay. Actually, paste here. Okay. And under Social Security tax or OASDI taxes, remember that retirement plan contributions such as 401ks and 403b plans are taxable for Social Security taxes. And it should not be subtracted from gross pay when we are taking into consideration the taxable earnings. So in this situation, Evan Carter contributes 9% to gross pay to 403b, which we would not subtract because it is subject to OASDI taxes. However, he does contribute $125 to his cafeteria plan, so we're going to go ahead and subtract that. Okay. So if we go ahead and calculation, our taxable amount for Evan is $1,500. Okay, simple as that. That's the amount that we're going to tax. We are just looking at the tax right now. We're not doing actual calculation of how much tax they owe. We're just looking at what we need to do to figure the taxable amount for that period. Okay. All right, for 2, Theresa Henry earned gross pay of $25.25 during a recent pay period. She contributes 8% of gross pay to a 401k retirement plan and 4% of gross pay to a dependent care flexible spending account. Okay. So her gross pay is $25.25. And remember, the 401k is not, it is taxable, but that 4% of dependent care is not. So I'm going to go ahead and subtract that $101, and the taxable amount then for Henry, Teresa Henry, is $24.24. Okay. For number 3, Candace. Candace Mann earned gross pay of $875 during a recent pay period. She contributes $50 to a flexible spending account and 4% of gross pay to a separate dependent care flexible spending account. Okay, so her gross pay is $875. Hold on here. Okay, this one Candace will have 2 different subtractions or deductions. Okay, she will also have the flexible, the dependent care flexible plan, which is 4%. Okay, and she will also have a deduction of the flexible account. That is $50. Okay. I'm going to just put in subtractions in here so you guys know that we're going to be subtracting these. So the total current period taxable earnings for OASDI is $794, Candace Mann. Last but not least, for Jeremy Reynolds, he earns a gross pay of $965 during a recent pay period. He contributes 8% of gross pay to 401k retirement. Remember that 401k retirement plans are taxable, so we do not need to do anything here. The entire $965 is taxable under OASDI or Social Security tax. Okay, so that's that one. If you have questions, make sure you email me or give me a call. Otherwise, good luck.